Today we are going to be talking about investment strategies, and this is probably my first live stream since like September. And the good news is you know, you guys can test it out. We're going to be trying to do a series of kind of interviews with some other people about their investment strategies. We're going to be talking about different things in the market that's going on, and so just kind of welcome, and if you are here, just leave your name in the chat. I don't know how many people are here. Let me see. I got just me, I guess. But we're gonna be going on, and hopefully this works out. I've been trying new software out to see if this works out, and just kind of bear with me on kind of this live streaming. It's going to be an adventure, and I enjoy good and new adventures. Now, I've been having a little bit of new adventures. Some of you guys may know that I had a son that was born in November, and so we're coming around 3 months, which is pretty good. And so, if you get guys look at my eyes and they look a little bit tired, it's because he woke up at I think 1 a.m. this morning and about 5 a.m. And so I got to see that the market was down a bit. And when I looked at one point, my portfolio was down about 7.5%. It's now back up, but I mean, that's kind of the market for you. The market is a little bit red, and it's been a little bit red for a little bit while. And so it's just a good time to kind of dive into some of our investment strategies, see what we can kind of learn, see what we can dive into, and see, some new things that we can learn. I mean, there many people have different strategies. We're talking about retirees have a different strategy than maybe someone like me that's middle age, and then someone like maybe someone's in their 20s. And hi, Gary, welcome back. And see that we've got some guests, which is great. And I'm kind of always looking forward to this. All right. So, cool thing is, I've got this is like my bedroom, kind of where I kind of do a lot of things. And so I've got a screen over here where I may look at for from time to time. I've got my camera right here. I don't have a teleprompter yet, but um, we are going to try to do this and see how it all works out. All right, cool. Now, if you guys have any questions, you guys can always leave it in the chat. If I don't see that, that's okay. If you do, um, if you do see have like an urgent question or something that you want kind of broadcasted on the screen, you guys can leave a super chat. I can see this better, they last longer, and then I can plug them in on the screen. Otherwise, I'm going to be kind of conversing with you guys on the chat, and feel free to leave any questions. Now, like I said, we're going to be doing a series, and the cool thing is, I'm going to have other people come on to this live stream with me later on in the future. I've already got one guest set for next week, which is awesome. His name is Darius Jamal. If you guys haven't found Darius, Darius has got a great YouTube channel, kind of similar to mine. And the cool thing is, he has agreed to kind of help me out and do some live streams. And so that's great. And so, you know, and the cool thing is I get to kind of talk with other creators and kind of interview them and even see, everybody's got a different strategy. Maybe if you guys are lucky, I'll have a call-in show where you guys can kind of talk and also be able to provide some insights in the way you guys do things. Because I'm always learning from you guys. I mean, I am not an expert in growth, dividends, and covered calls. I love my growth. I love kind of talking about covered call ETFs, but I know some of you guys are great, and some of you guys have learned so much and teaching me as well. Yeah, wow, we got some good people. We got about 7 people in here. Yeah, this is amazing news. I hope I'm clear. Hope I got some good sound, and this is going to be a great day. Now, today, like I said, it's been a kind of a red day. I've looked at my Robinhood app, and I was like, "Oh, my portfolio is down 7.5%. It's now only down maybe 3.5 because of after hours." But the cool thing is, this is just opportunities to buy things when they're on sale. Um, and there's been a little bit of some noise, of course. And thanks, Ashley, for the ETFs. We're going to be talking about some ETFs today. And the market's had a little bit of noise. I mean, crypto's down. People have been selling on like other things like AI. AI is down. Well, Google is up like 3%. Well, it was up at 3% at some point today, but I mean, they're looking at investing like $175 billion into infrastructure for AI and GPUs, which is crazy. Yeah, exactly. Yeah, Gary. Yeah, there is. I mean, um, he's got some great insights, and so I'm gonna be seeing. I think he's. I think when you talk to him, it's a little bit better than kind of his videos because his videos are great, but they're a little slow, methodical. But I guess when I was talking to him, maybe I was excited to talk to him because I guess I'm excited to talk to this camera, excited to kind of interact with you guys. And this year's been a little crazy. I mean, I think at one point, I was talking to my cousin. I was like, "Oh, my portfolio is up 4.24%." And I look at today, it's like down like 12 to 15% now. So the market's been a little crazy. So that's why we're gonna be jumping in, talking, and if you guys have any questions, like I said, leave it in the chat. I'm gonna be looking at the chat right over here. And if not, I'm gonna be looking at this camera. I've also got a presentation, a little bit of presentation that I'm gonna try to share and let me know how it goes. This is the first one of the year. We're gonna be trying to get better. Every day is a new day. Get 1% better every single day. And the cool thing is, my camera looks pretty good. Hopefully, my sounds pretty good too. We'll be diving in, and like I said, leave a question, leave a super chat, and let's dive in. All right, let's see. I'm gonna try to get this going. Let's see if I can share this screen. All right, cool, cool, cool. So I'm gonna dive into I got 5 different investment strategies that every investor should know or just kind of diversify into the ones you guys may want to know because each investor is different. Each investor has a different strategy. I mean, you have the ones that just invest in dividend stocks. You have the ones that like the classic dividend ETFs. The ones that like growth ETFs. The ones that like kind of sector ETFs. The ones that do cover call ETFs. And then some of those guys, just pick and choose and kind of create their own strategy. Because each person is different. Each person has their own different style, I would say, and some people have a ever evolving style. I mean, for me, my style, I think when I started off with like a classic 3 fund portfolio where you have a broad market, you have an international, and you even have maybe some bonds. And I wasn't really putting money into bonds because I was like 30, 31 years old when I started. And so I wanted to grow it. At this point in time, I'm going to definitely discuss my own approach at the end. But at this point in time, I'm growing my money for the long term. I'm a wealth accumulation phase. And there could be other people. Like when I talk to my dad's in a different phase. He is throwing in different dividend stocks. He's even doing some cover call ETFs because he watched my channel, which is awesome. He told me, he's like, "Yeah, I just bought this cover call ETF after watching your QQQI video." And I was like, "Wow, that's amazing." So if you guys learned something, that's great. Make sure to hit that like button, subscribe, and let's get to it. So we got 5 investment strategies every investor should know. And it's going. So you got the classic 3 fund portfolio. Now the classic 3 fund portfolio, of course, you have maybe a um, total market index fund ETF. This could be. I've got it right here. 60% allocation. Sometimes people do it a little bit less, a little bit more, but you got the classic ones. You got the VTI, VOO, SEHB, IVV. These track, the total market. So it's giving you guys a broad base of different stocks. And so when new ones come in, they come in. When new ones go out, they get out. And so it's kind of self cleansing. Of course, you got the international one. Most like bogglehead people would say VXUS would be a good one. SEHF is a great one by Schwab. VYMI is a great international dividend one. And there's the index fund of VTIAX, which is basically the index fund of VXUS. Now, I've got a bunch of VXUS. I'm going to tell you, first of all, having 8,000 different companies in the international world has not been always the best. It's I started investing when I was, I think, 30 years old. And so I put a lot of money into VXUS. And for years, it did absolutely nothing until about 2025. And so at one point, I just stopped investing into it because it just did nothing. And I could allocate my money into something better. Now, as 2025 has happened and the international markets has gone up, there's probably definitely better ones to invest in. VYMI is a great one. IDMO is a great one. Some people with the covered calls are probably dive into IDVO, but internationals could be a good one for the couple years, and then it's going to probably rotate back into U.S. stocks. But that's part of that classic three fund portfolio that boggleheads usually do. And then of course, you got bonds, you got BND, AGG, you got ITI, you got some other great bonds. And I put out 10%. Sometimes people have more. As you get older, people will progressively put more money into bonds because it's a safer investment than the US market. All right, let's dive in and see if we got any good chats going on. All right. Uh yeah. Yeah, so Ashley's got some good chats about IWMI. We'll talk about that in a second. Yes, these headphones, I'm going to be honest with you. I got these headphones flying, I think Eva Air, and I've I had two pairs. I think my daughter took my other pair, and so I've got these they do pretty well. um Gary's got a nice silver ETF. Oh wow. After a month, yeah, it crashed, yeah. Ugh. Metals crashed maybe 2 or 3 days ago, I think, or maybe it was last week. I don't remember, man. These days are just kind of flowing together. Yeah, yeah, Neos has got a new one, NIHI. Now it's quite new. It's about maybe 3 to 4 months old, maybe even newer than that. And that could be a great one for cover call ETFs. All right. Cool. You guys have some great questions. We got 10 people in there. That's amazing news. Oh, have I stopped sharing? Probably not. Oh, there I am. Okay. Cool thing, guys. All right. So yeah, you got some great questions. Continue to leave those in the chat. Yeah, IWMI is a great one. I actually have a video that I recorded yesterday about ranking 11 different cover call ETFs, and I added IWMI into that, and we're gonna be seeing if in probably a couple weeks. Depends on how fast my editors get done editing this. So we'll be seeing that video coming up very soon. All right, so we're gonna jump back into that presentation, and I don't know if you guys can see me or it's just a picture of me. All right. Yeah, so a lot of people have been seeing these new aged three fund portfolios. I think Professor G, if you guys haven't followed his channel, he's got a great channel out there. He kind of made this new age three fund portfolio probably out on the open. A lot of people have kind of taken pieces of this, but it's probably been around for a while. And basically, what it does, it's more of a U.S. tilt. So basically, what we're doing is we're taking a broad market ETF like a VTI, a VOO, an SEHB, an IVV, or something that's a broad market, and we're taking it, we're doing maybe 30%, 35%, and we're adding a growth portion of that, maybe an ETF like a QQQ or QQQM, maybe an SEHG or a like VONG or even a VUG. And so it's giving you you got that broad market kind of exposure with a growth exposure part of that, and then they're also throwing in a more of a dividend exposure to that, which is like maybe an SEHD, a VYM, an FDVV, a DIVB, a DGRO. I've got a video coming out on my rankings of these dividend ETFs, and it's kind of funny because SEHD on that is actually ranked pretty low, and now since its performance is sitting at about 11% year to date, It's kind of shocking, but I mean, people have kind of gravitated towards growth and putting it more money into value right now. And that, so it's not as shocking. We'll see what the reconstitution happens with SEHD. I know Gary's got his thoughts about SEHD, and like I said, my ranking wasn't very high on it. So we'll see. We'll have some great comments about that later on when I get that out. Probably it's going to come out next week. My editors are still working on it, and it's still kind of having fun with it. All right, cool. And so this is like that new age. A lot of people are going to be putting money into that growth tilt and the dividend tilt. The thing with this one, it's not as conservative as the boggleheads. It's a little bit more volatile because you got more money in growth. But that's the dividend section is going to be kind of that kind of stability portion. And a lot of people are kind of diving out of dividend ETFs and diving more into those cover call ETFs. Like we have great cover call ETFs like a GPIQ, QQQI, SPYI, GPIX, QDVO, TSPY, we have Devo, we have IDVO. Oh man, the list just goes on and on. It's crazy. And that's the good news is because Neos is creating some great ETFs, and then you have Amplify creating some ETFs. Round Hill's got some great cover call ETFs. There's just so many great ones out there. And the cool thing is you can have different strategies for each one. Like the Goldman Sachs ones, like GPIX and GPIQ, are different than the Neos ones, which are different than the JP Morgan ones. But soon enough, we'll be talking about that in the next section. Um, let's see if you guys have any questions about this. We'll go to we'll stop that sharing and see. All right. All right. Let's see if you guys have any cool questions. Yeah. Yeah, the boosted Neos ETF should be coming up very soon. Yeah, and Chippy and Blocks. Chippy is pretty good, and Blocks has probably gone down a bit just due to the fact that Bitcoin and cryptocurrency is kind of crushing as well. It's like cryptocurrency is going down and Bitcoin's going down, and hmm, wonder if I need a fan on my camera right now. It's getting a little hot. Let's see. All right. Yeah, well, Ashley and Gary's got this great conversation in here, which is awesome. Um, let me. I may have to actually get it. Hopefully, my camera's not getting too hot. Hopefully, if it shuts down, I've got a second camera. I can turn on probably my other camera. Um, but yeah, all right, cool, cool, cool. Wow, Gary, 20 ETFs. That's amazing. It's a little bit more than me. I think I have maybe 7 or 8 ETFs. I think I've got VTI, SMH, VGT, VXUS. I've got AVUV. Oh, that's a good one. 5, 6. All right. Cool, cool, cool. All right. Move on. Let's do it. Anyone have any good questions before we move on? Because I'm going to be jumping into some basically like more of an income strategy and then more of a growth strategy, and then kind of dive into how I'm doing things because what I'm doing is a little bit different. Oh, want modern growth. Is it Mr. A. Lewis? I don't a Lewis. Um, At 49 years old, a moderate portfolio. That's a great question. I think if you're just starting off, and I don't know how much money you've already invested, but that's always some different things to think about. Is when we're looking at a good moderate portfolio, even at 49, you've got about 15 years, 15, 20 years until retirement. Depends on when you want to retire. Depends on how your back and your body is doing. It is it's always a different thing. And so a good 3 fund portfolio could be, I always think a good broad market is a good way to start off with. And then you can add your different tilts, I would say. I say tilts because you can get into more growth with a QQQM and maybe even a VGT, an XLK. We'll talk about those in different sector ones. But if little sections, I mean, we'll get back to that in a very second. Hey, Lewis, I'll write that question down and then we'll get to that in a second. Let me just dive right back into that screen share. All right. Cool, cool, cool. All right. So a lot of people are getting into income focus, and these are those that are maybe it doesn't really matter how old you are, but a lot of people are probably going to be a little bit older than usual. Um, Hopefully my camera doesn't shut down because of the heat. But so we got high dividend stocks, like you got utilities, you got REITs, you have different dividend ETFs, and we got energy ones. I mean, iShares makes a ton of great ETFs that track some of these utilities and tracks kind of these energy ones. I'll probably leave a list of those soon enough. Then you got your classic dividend ones, the SEHD, the FDVV, the DIVB, the DGRO. Those are some classic ones. I mean, SEHD's got a dividend yield around 3.78%. DIVB is sitting at about 2.44. DGR is sitting at about 2.0. VYM sitting at about 2.36. FDVV sitting at about 2.8. And I knew these right off the head because I just recently did a video on it. So, but yeah, these are classic dividend ETFs. So you got classic dividend paying companies like a Coca Cola, Home Depot, and IBM. And then you got cover call ones. Now, a lot of people, I've been talking about cover calls for a while. Gary talks about cover calls because he is like a savant on cover call ETFs. And basically, so you got these cover call ETFs. They are the big company to watch out for is Neos. Neos is a company basically started all about cover calls. And so you got their OG SPYI, which tracks the S&P 500. It's got about 11.6% yield, and it's got an expense ratio of 0.68%. So what it's doing is selling the assets under management as a cover call. So the way a cover call basically works is you have 100 different stocks. You sell the option to someone else to buy it at a certain price. That is called the strike price. They pay you a premium, and this premium is kind of the distributions that Neos is going to make to all these people. And so if that stock hits that share price, that strike price, you sell it and you make money off the capital gains. Now, if it never does, you still keep the premium. That's how basically a cover call works. And so what they're doing is they're not selling it just on one stock; they're selling on the entire portfolio of stocks. So if it's SPYI, it's the S&P 500. If it's QQQY, it's a Nasdaq 100. The Nasdaq 100 is a little bit more volatile, so premiums are going to be a little bit higher due to implied volatility, and so that's why QQQI is going to have a yield of around 13 to 14% or even to 15% just because of that volatility that is going on. Now, with GPIQ, it's Goldman Sachs version of this, and so they're actually selling. Neos is selling out of the money cover calls. GPIQ and GPIX is selling at the money and allowing maybe anywhere between 25 to 50% of their portfolio to be and to allow it to have some upside to it. And so with SPYI and QQQI, they're having more of their portfolio being sold on the out of the money cover calls. So the price appreciation is not as high as GPIX and GPIQ, but I mean, their total returns are very similar. QQQI in 2025 was 18.86. GPIQ is around 19.97. Now, GPIQ also had maybe a 10.3% yield, while QQQI had a 13.65, 13.7% yield. So the trade off is total return versus your yield. And so when you're looking at the income focused strategy, a lot of people are going to dive into different cover call ETFs. Maybe they'll also have some dividend ETFs to kind of add into some stability with that and getting kind of qualified dividends versus other types of dividends. Some people are going to go with those high dividend stocks with the utilities and the REITs. And REITs are going to be a little bit more stable. The income is going to be taxed as an ordinary rate. And but Different there's different strategies with this. There's different ways you can create an income focused strategy. So, I mean, a lot of people, if they're already in retirement or even wanting just to have extra income, like if I wanted to invest $100,000 into like a cover call ETF, like an SPYI, I could be getting about $11,000 a year or $970 per month. Now, that's pretty good income. And if you are looking for income, this could be a good strategy to have. Now, we'll kind of see what you guys are thinking about that. I'm going to dive back into those chats. Um, yeah, you guys have some great chats going on, which is cool. Let me stop that sharing. Now I can talk to you and look at these chats. Yeah, Neos is an amazing company. The way they're doing things is they're not just selling cover calls. They're also, when the markets have different conditions, they're also buying call options on that. So if like a stock like Amazon falls down, they may buy a call option for Amazon. And so when it jumps back up, they can sell it and also have a little bit more premium and a little bit more kind of different strategies. So they're selling cover calls and possibly buying cover calls, buying calls on different options. And so that kind of helps out with making their funds even work even better than usual. Yeah. Now, if we want to talk about GPIQ, GPIQ, GP, JEPQ, I'm sorry, the JEPQ. JEPQ and JEPB have just kind of they haven't done really well. I mean, I took a look at JEPB yesterday. I think in 2025, it was up 8.17% total return, but their yield was 8.08%. So basically, the entire ETF was just pushed by its yield. But there's other great cover call ETFs out there. I mean, we talked about GPIQ. There's TDAC is a great one. TDAC is quite new, and so it doesn't have as much data as a lot of other ones. QDVO is a great one. It's got a little bit of mix, a lot of tech, and it's got a bit of some classic dividends ones because I think Coca-Cola and Home Depot is also in QDVO. And so you're getting maybe a good 10% with some price appreciation. TDEX got a lot more yield versus price appreciation. It's got that 0 days until expiration for TDAC. Yeah, so we got these great monthly income ETFs that you guys can create a portfolio out of. And so, yeah, of course, I mean, JetQ's been doing better. JetB's been doing kind of not so good. But that's, I mean, every year is different. A lot of people get on that hype, that hype of different ones. And JetQ was on the hype maybe 2 or 3 years ago. I think QQQI was kind of up there. But yeah, like I said, I've got a video coming out soon on my rankings of these cover call ETFs. You guys may disagree with me. That's great. You guys can leave those in the comments. All right, cool. You guys doing good? Oh wow, we've been going for 29 minutes and still my camera hasn't shut off, even though it's saying it's hot. That means we're doing some great stuff. All right, cool. I think we're gonna dive into some growth and maybe some. I don't know if you guys like growth. I'm a huge growth person. Um, I right now I drip all my dividends. If I was in covered call ETFs, I may use them to probably drip into other dividend ETFs. Which ask Gary. Gary probably Gary's got some pretty good payouts. He shared with me in some emails. Um, but yeah, I recorded my cover call ETF video last night, and my hope is today, after we do this video, this live stream, to record a video on seeing if QQQI could be a ETF to help you retire early, or something. I got to look at my title. I've got it written down and was going over it yesterday. But yeah, let's talk about growth because I'm a huge fan of growth, even though growth stocks are tanking right now, which is a kind of a bummer. I've got a lot of money sitting in some growth stocks and some growth ETFs. Let's see if I can share that screen. Anyone have any questions? You guys have been doing great in this chat. I love it. You guys are very on point. If you guys have any questions, any thoughts? Oh ho ho ho! We got Marcus Mila in the house. I gotta get him on one of these live streams with me. Marcus Mila, I'll send you an email, man, and we'll get on a live stream together. Um, I'm in my bedroom. Of course, I got my baby's bed behind me, and you got a pretty cool office, Marcus. So it'd be cool to get on a live stream with you. Let me write that in the message. See if you see it. All right. Cool, cool, cool. All right. Let's get on to some of those growth stocks and share that screen. All right. Cool, cool, cool. I feel like Jake from Brooklyn 99. He says cool, cool, cool. All right. We're on that income focused strategy. All right. And honestly, I kind of dive into some of this pure growth strategy where I do have a huge I do got some VTI instead of VOO, but I like that broad market core. And then we add some of those growth ETFs and even some sector tilts. So what I mean by the growth ETF, so you got broad market kind of growth ETFs like a QQQM or QQQ. You've got VUG and SEHG. SEHG tracks the Dow Jones Growth Index. So it's got about 220, 228, 230 different companies, but it's basically all the large cap growth. You got the NASDAQ 100 with QQQ, and this is the top 100 non financial companies on the NASDAQ exchange. And so you're going to get top companies like Apple, Microsoft, you got Tesla, you got Amazon, you've got Costco in there, and I know Gary was off to Costco, and that's great. I love Costco. I used to shop actually at the second busiest Costco in the world, which was in Taipei, Taiwan. And it was, I'm going to tell you what, it was one of the busiest places I've ever seen. There's so many people there, but it's also the busiest in the world. So it was pretty crazy. And then you also have some great other companies within QQQM. Now, or QQQ, whichever one you want to go with. QQQM's got an expense ratio of 0.15%, while QQQ's got an expense ratio of 0.18%. And these are some great growth ETFs that you could add to your portfolio. Now, when we're doing a pure growth, I mean, I put numbers on here. I say broad market, you can have anywhere between 30 to 50%. You can have growth anywhere between 25, 30, 40%, depends on how old you are, how much you want to grow, and how much you want your money to grow anywhere between 10 to 20 years, or if you're five, probably a little bit less. And then I also have some sector tilts. VGT is more of a tech sector tilt. It's got 100% tech. And if you ever look at the portfolio itself, the top three or four probably making up anywhere between 40 to 48% of the portfolio, which is got Apple, Microsoft, NVIDIA. It's also got Broadcom, it's got Palantir in the top 10, and it's probably got AMD and Micron as well. Then you got some semiconductor ETFs like SMH, you got SOX, SOXX, and even PSI from Invesco. My favorite is SMH, and you guys can fight me in the comments. I mean, I like it as my favorite just because I like Taiwan Semiconductors. Taiwan Semiconductors is the largest producer of chips in the world, but we got designers like Nvidia designs chips. We have Qualcomm designs chips. Then you have like ASML, which creates the manufacturing machines that create the chips. They're actually like 90% of the world's machine creations. And so that's why I kind of like SMH. SMH has got like 26 different holdings. The expense ratio is 0.35%. But on average, it's been doing anywhere between, it's been doing about 27% average since 2011 when it came out. And last year alone, it was like up 50%. I love SMH. Now, another one is SPMO. Now, this one is more of a momentum shift, and it's got a little bit more momentum of the S&P 500. And that could be a different strategy you guys may want to do as well, more of a momentum strategy where you can do like an SPMO, you can do an IDMO, you can do maybe some other kind of momentums into that strategy. So that's a different strategy alone. All right. And I think, yeah. So I got some other additional strategies, that factor strategy where you got like VGT, SPMO, you got quality versus low volatility, you got small sector, um, small caps. You also got some sector rotation. Some people rotate out into healthcare, into kind of financials, into energy. And then, of course, you got weather portfolio by Ray Dalio, and you also got target date funds. Now, I do have definitely more slides, but I'm going to check in, you guys, see what the chat is talking about. And all right, cool, cool. Oh, thanks, Marcus. I'm just diving into these chats. Thanks, man. Well, definitely, I'm going to hit you up probably after this live stream and see what I can do to get you on this show. All right. Um, Marcus loves his VOA. I know it. I know it. I always watch it. I'm like, oh, he's got more VOA. I've got more VTI. Let's see who really dukes it out. Well, VTI is basically 87% VOA in the long run. All right. Cool, cool, cool. Yeah, so yeah, that was a little bit about some growth ones. Um yeah, I'm glad you guys have joined the chat, and I know Gary's in here. Cool. He is. Yeah, I know. Jerry was just talking to me the other day about PSI, and I was taking a look at PSI, and the I would say the PSI is a great one by Invesco. Invesco's been making some great ETFs recently. Oh crap! I think my camera just shut off. Let me switch the cameras. Oop. Sorry, guys. Ooh, ooh. Hopefully my microphone's still working. Oh, come on. Um, Sorry, guys. My camera just kind of overheated. I've been so excited to do this live stream that I've had my camera on for over an hour. Let's see. Let's see. Okay, I'm back. All right, sorry guys about that. Camera's getting a little overheated. I'm probably gonna last about 20 more minutes, and then we'll be done. All right, cool. Yeah, yeah, I really like these momentum ETFs. I made a video about it with SPMO and IDMO. Invesco's making some great ones. I've got to do a little bit more research into PSI. I still like my SMH. You guys can fight me in the comments about it. Yeah, which is cool. But you guys have been doing great hanging out with me. But kind of, kind of the way I have been investing in a lot of things is, first of all, I started off, the classic boggleheads. I got the VTI, I got VXUS. And then I kind of tilted towards growth. I got a bunch of QQQM. I've got a bunch of VGT, they're kind of like an equal section of growth within my portfolio. And recently I've been getting into not dividends, some growth stocks. I kind of really like some of this AI stuff, but I got some Nvidia, I got Amazon's, got some Google. I even got some high beta ones like Rocket Lab Fuel and some other kind of ones. And I've actually been um, instead of doing what do you call it, cover call ETFs, I've actually been selling my own options, and not too bad. I mean, I wouldn't say I'm not doing too bad at all. I think in January I did about $4,000, which is pretty cool. Do I hold any weekly ETFs? No, unfortunately, I do not hold any weekly ETFs. Um, I I like the monthlies. I like the monthlies a lot better than I like the monthlies. I need to kind of do a little bit more research into weeklies. I'm kind of that conservative investor where I like to do a lot of research and then kind of dive in and then jump in. I think I learned a lot from Gary when he posts new ETFs. I'm like, oh man, Gary, you're doing more research than I am. I got to keep up. um, but of course, I've got a 3-year-old and a 3-month old, and so things are things are getting a little crazy. Yeah, you're probably right, Gary. Good weeklies are probably more rare than than the good. I would say the good monthly ones. I mean, Neo's Neo's creates if they had some good weekly ones, um, as good as their monthly ones, man, I think it's like game over. But that, but yeah, I've actually been kind of diving into selling my own options, and yeah, not so bad. But I mean, I love some these cover call ETFs. It is a game changer. It really is, and that's probably why I've got some videos coming out about it because it's a oh my goodness, my camera is really sorry guys, sorry, camera too hot. All right, all right. Let's see. Let's try to. I think next live stream, I'm gonna put a fan on my camera. I think today is mid 80s down here in Melbourne, Australia. If you guys were watching the Australian Open, one of the couple of the days we're hitting like 105 and 110. Whew, hot. This morning it was much cooler. It was sitting in the high 60s. All right, cool. Well, let me let's finish off and if you guys have any great suggestions, throw them in the chat. I'm gonna probably take some of those suggestions and make some cool videos out of them. And next week we are going to have a guest on my show. It's Darius Jamal. And if you guys have watched any of Darius Jamal's videos, we're gonna dive into some of his thoughts about some ETFs. His kind of investing journey, investing strategy, and we're going to be talking about that. We're going to be diving deep, and I am going to uh yeah, no ice allowed. Yeah, too hot. That ice melts like like on a hot summer day, you know. But we're gonna be diving into some of his kind of ETFs, and it'd be very awesome to get Marcus Mule on here. I'm also thinking about getting stockpile investors. Well, Jeremy, he is. I've been talking with him through some messages, and it'd be cool to get him on here. And if you guys ever want to be in guests like Gary, I'll send you guys an invite, and we'll jump on and see what you guys think. It'd be great to talk with you as well, Gary. All right, I hope you guys have a great day. Before my camera shuts off once more, I need to probably put a fan on it. Sorry, camera. I hope you guys have a great day, and I hope you enjoyed this video. Make sure to hit that like button, subscribe, and we'll be seeing you guys next week, same time, same place, because Darius wants to do 7 p.m. Eastern time. So we'll try to dive in and do that. All right, you guys have a great day, and I'll catch you later. Let's stop this video.